it's a little known secret in the industry, but just about every CEO rings me every once in a while and say, hey, what are you thinking on M&A? And do you want to, can we join forces with HEXO? Because they see the fundamentals, and there's a disconnect between the fundamentals and our value of the stock at the moment.
Hey guys, welcome back to the channel. HEXO reported earnings on March 18th, and initially the stock jumped 6%, but since then it's plunged over 11%. This is despite them beating on revenue and posting their first ever positive adjusted EBITDA. I don't think the market is taking HEXO nearly seriously enough right now. The company is already closing in on the number 2 spot for the recreational Canadian market, and long term, I think they will control enormous market share. HEXO also already has a major foothold in the US market, and they're the number 1 contender to become the biggest global cannabis-infused beverage company. In this video, I want to go over their results for fiscal Q2 and give my updated outlook on the company going forward. Management also made some very interesting comments on the earnings call, particularly around the direction of the cannabis industry right now and HEXO's plans for further expansion, which I will also discuss. Full disclosure, I do have a small position in HEXO that I am actively adding to, and I also happen to work in the industry on the retail side. And don't forget to like the video if you get some value today. It really helps to grow a small channel like this. And of course, subscribe for more content in the future. So first off, the big news was the surprise positive adjusted EBITDA of $200,000 that HEXO reported. They were targeting positive EBITDA by first half 2021, but honestly, I originally thought that goal was optimistic, and I am really impressed to see that they were actually able to accomplish this. This achievement was a result of management successfully executing on their war on cost of goods sold by continually optimizing their production and automating their facilities. Operating expenses have continued to shrink as well. The most important cash items to look at are SG&A, marketing, and research and development, which are the core expenses that keep the business running. Combined, these expenses only made up 47% of net revenue, down from 51% last quarter and 94% a year ago. This is a really important number that you should focus on. HEXO is leagues ahead of most of their competitors in this department. If we take a look at Canopy Growth's last quarter, they spent nearly as much on sales, general, and administrative as they made in revenue, over double what HEXO spent as a percentage of net sales. This demonstrates that HEXO runs a much tighter financial ship, effectively controlling their expenses and ultimately leading to higher profits and a safer investment long term. In my opinion, HEXO could start generating real positive GAAP EPS by 2022 to 2023. And the management team is very focused on driving long-term profit growth. You might think that all this cost cutting would hurt growth, but you'd be wrong. Top-line growth actually accelerated to 12% quarter over quarter and grew a whopping 94% year over year to $33 million net. They've also made gains in market share, maintaining the top position in Quebec, 3rd in Alberta, and in Ontario they managed to grow from 5th to 6th place last quarter to now being on the cusp of top 3. And this is while many stores still don't carry their SKUs. As their market penetration continues to increase, so will their overall market share. Their newly launched Up brand, which I mentioned will be big for the company in my last analysis, has been flying off the shelves and is up to $3.2 million in gross sales, or 8% of their total recreational non-beverage sales versus 1% last quarter. This brand is also helping to boost their gross margins as it is a slightly higher priced, more premium product. Overall, the company managed to achieve 40% gross margins on their non-beverage portfolio, up from 39% last quarter and above their long-term target of 35%. So far, I've only seen 3 SKUs for this brand in stores, but sell-through has been great, and as they introduce more SKUs, Up is going to continue to take market share. In the beverage category, revenue grew 11% quarter over quarter, and they grew their market share to 43%. Their only real competitor in this space right now is Canopy, who trails them at around 34% as of their last earnings release. In my opinion, HEXO's product portfolio is far superior to Canopy, holding 6 of the top 8 SKUs in Canada and offering a much broader range of options to consumers. They've also launched CBD beverages in Colorado under their Very Well brand, and importantly, and unlike in Canada, these drinks are actually available in grocery stores, so consumers will not have to go through traditional THC channels like dispensaries to be exposed to these products. Management also hinted that they will be expanding into 5 more US states, and I think we will start to see them expand in the US throughout this year. HEXO's stated goal for Trust USA, which is their joint venture with Molson Coors, is to become the #1 in cannabis beverages in every state that they operate in, and they are well on their way to achieving this. By starting with CBD beverages, they will have a well-established foothold in the market, and by developing products for the Canadian recreational market, they will already have a great portfolio of THC products ready to launch as soon as legalization hits the US. Through their partnership with Molson Coors, HEXO's distribution and production will be unparalleled, unlike other companies which will have to invest massive amounts of capital to build up facilities, purchase manufacturing equipment, not to mention actually developing the products. HEXO are able to lever existing infrastructure and supply chains through Molson Coors. This is a really huge competitive advantage that will allow them to get to market faster, cheaper, and at a much larger scale than any of their competitors. To get where HEXO is now, other companies would have to invest hundreds of millions, if not billions of dollars. This fact, along with how strong their beverages are already selling in Canada, gives me confidence that HEXO through Trust USA is going to be the biggest player in the North American cannabis beverage market long term. And if all goes according to plan, more countries start to open up their markets and HEXO continues to execute, I think they will eventually become the #1 player in this market globally. The infused beverage market is expected to grow to over $5 billion globally over the next 5 years, and I think HEXO has a real shot at taking 20 to 30%, if not more, market share, which would be a $1 to $1.5 billion revenue opportunity annually. And if you think these numbers are unrealistic, remember that they already have 43% market share in Canada, and with their global partnerships, they are in an excellent position to expand internationally. If we take a look at a company like Coca-Cola, for example, they have over 40% market share in carbonated drinks globally. It's definitely not impossible for a company to take this kind of dominant market position if they have the best brands, best products, and best distribution, which I believe HEXO does. Right now, at around $3.5 million in sales, beverages are basically break even for HEXO. But once they start getting to a much larger scale, they could become enormously profitable. Gross margins for most traditional beverage companies tend to be very healthy. Going back to the Coca-Cola example, we can see they've maintained gross margins in the 60% range for decades, which is nothing short of incredible and shows that this industry could be a huge cash cow long term. Now, I don't expect HEXO to have 60% gross margins. Obviously, as a much smaller company and with a more complex and capital-intensive product, that isn't likely. But certainly, margins in line with the rest of their portfolio in the 30 to 40% range are not out of the question long term. It's clear HEXO's organic growth is strong, and I believe it will continue to be strong going forward. But in my opinion, their real competitive advantage is going to come from inorganic growth. In other words, growth through acquisition and partnerships both on a global and domestic basis. Competition is heating up in the industry. Management believes we are entering the most competitive phase since legalization in 2018. Many companies aren't going to survive, which will open up more opportunities for HEXO. With their strong balance sheet and existing partnerships with big companies like Molson Coors, HEXO is an attractive company to do business with. And in fact, management mentioned on the earnings call that they are in the final stages of negotiating partnerships to manufacture and distribute edibles for other companies on a royalty basis. They've also made it clear that their focus is global, and they plan to partner with CPG companies around the world. In the United States and the rest of the world, they plan to leverage their intellectual property and license out their products to other companies, collecting royalties at basically no cost to them. Their acquisition of Zenabis is expected to close later this year around May to June. Combined, the two companies are less than $1 million away from the number 2 spot for recreational market share in Canada, and I think they will be able to outcompete Canopy, and at this time next year, HEXO will probably be the second largest LP in Canada. This acquisition is expected to result in at least $15 to $20 million in cost savings, while also hugely increasing their capacity for high-quality indoor grows. For me, as I've stated before, this stock is a buy at anything under $10 Canadian per share. I think the long-term opportunity here is huge, as I believe the global total addressable market for cannabis is eventually going to be measured in the hundreds of billions, and there will only be a few massive companies that control most of that market. Anyways guys, I want to thank you for watching if you made it this far in the video. I really appreciate your guys' support. Leave a comment if you have any thoughts on HEXO, or if there are any other companies you guys would like me to analyze. And don't forget to like if you enjoyed and subscribe for more in the future. I'll see you all in the next video.